So we've mentioned money supply quite a lot throughout the interview because it's, as you mentioned, it has such a big impact on the economy. Does it have a similar impact on markets and sort of how they react?
Well, the big thing with the markets, let's say the market in the United States, with a slowdown in the economy, of course, revenues go down to firms, and ultimately profit margins go down and profits are reduced, and the earnings picture becomes not so bright, and right now all the earnings forecasts are quite bullish and positive. But if a recession starts cutting into those, which it will, we'll have, I think, a big correction in the stock market. The price earnings ratios are going to come down. The multiples will come down in a recession. They won't go up. And they're very high right now. The market's very pricey. There are very few cheap stocks to buy. There are almost none. They all have very, very elevated price earnings ratios. They're expensive. So they'll become less expensive with a recession. It's just an earnings game. I mean, earnings forecasts will just they'll adjust them and they'll come down. And once that happens, the PEs will start coming down.